I'm joined with Ari Sussman from Collective Mining here at the Commodities Global Expo 2024 in Fort Lauderdale. Ari, thanks for joining us.
Thank you for having me.
So we were just talking pre-interview about sort of what's happened with Canada and how, like, every morning I'm waking up, Ari, we're hitting new highs in gold. Happened again today. I didn't even check today, and I just kind of already assumed we were hitting new highs. Somebody texted me, they're like, gold's doing it again. And you mentioned that most of, like, the tiny little micro caps, gold names, they're not really catching a bid yet. I don't know if that's going to come or not. We tell ourselves every day in this industry that it's going to come. From your view, what's the issue here with a lot of these Canadian names?
So it's many-fold. Let's start from the beginning. Gold is a cyclical business. The gold price and the equity cycles are never correlated exactly. So we had gold bottom 2011 to 2013 at $1,100 an ounce, approximately. And moves in gold tend to be 6 to 8 times. So that's saying gold's probably going to go to $6,000 to $8,000 an ounce if history is a precedent for today. The bear market in the equities started in 2011 for the producers and 2012 for the explorers. And the producers bottomed in 2022, in late 2022, and I believe the juniors bottomed this summer in July. Okay, the charts are saying that. So the moves tend to be 10-ish years. Okay. So we're at the beginning of it, and the juniors are just starting it right now. Maybe they have 8 years because they don't get as long a bull as the producers. Now, the issue, to your point on why is there no capital in the space, I think we have a problem in Canada. As you know, I'm Canadian. And I know this because the Australian market, which has the same basket of juniors, are trading far better, okay? Better multiples, better liquidity. And I think the problem has nothing to do with the mining industry or any industry. I think it has to do with the fact that there are 5 banks that have an oligopoly in Canada, and they've cannibalized their investors with their investment advisors. So investment advisors are incentivized to manage accounts, meaning they have discretion on how it's invested, and then they're encouraged to invest in the fund products that the bank that they work for offers. And those products, they can call them ABC, we focus on this, but ultimately they are worried about risk and they hug the S&P 500 performance. That's kind of the goal. Yeah. And they get to double dip. Yeah. What I mean by that is the investment advisor gets a fee for managing the account and putting them into the funds. And then there's also a fee charged for going into that fund by the bank. So the bank double dips on profit. And so that's removed a lot of the speculators out of the Canadian market.
Okay, that's and it's interesting you say that, because just hearing you talk about that, it all makes sense. Like, I'm 40 years old. A ton of my peers have decent jobs, whether executives, doctors, lawyers, that sort of stuff. None of them have an investment advisor at a Canaccord or a Haywood. They wouldn't even know what these words were if I said it to any of them. I live in Toronto. I imagine for people living in Vancouver, it's a little different because it's a little bit more of a cultural thing there. And so you're right. They're just, when they get to the point where they need an investment advisor, if they're even doing that, or just buying ETFs, which that's what most of them tell me that they're doing, that's exactly what's happening. And then we look around and it's like, well, why don't we have a strong commodity market? Canada, we used to be the commodity capital market of the world, right? You think we're at risk of losing that?
No. We're going into a massive bull market. The problem is it won't be the Canadians that lead it. It's going to be Americans on the Canadian exchange that lead it. It's starting. Okay. And nothing is better than a market where producers are up much more in valuation than juniors, because that means to do M&A, it's accretive across the board. And we're seeing that right now. We're seeing a lot of M&A, as you know. Okay. And we're about to see Newmont complete their asset sale process. That's kind of the bottleneck, I think, in M&A for the next month. Okay. Once whoever the winners are get announced, I think after that we're going to see the gloves off again, and we're going to see maybe a deal a week. I mean, it's really going to move hard and fast, because we haven't been in a situation where it's accretive for producers. They're spitting off so much cash. And look, let's not forget one thing. If the producers on a free cash flow yield basis, have the highest margins of any industry right now listed in the New York Stock Exchange, right? So it's better than tech, right? I was in Boston last week. I met with a fund manager who, within a large fund group, runs a resource fund. His fund's quite small. It hasn't had a lot of inflows yet. He's been the #1 performing fund within a larger fund group, and yet none of the other funds, except for one, own metals yet. They will start imminently.
Well, so it sounds like you're not coming on here and saying like, hey, we're close, and not giving us a date or a timeline, but like it's gonna we're gonna see it definitely. I know it's late 2024, but within at some point in 2025.
It started already. It started. We're just like the batter hit a single, like the first batter up, and we're on our way right now. Okay. It's underway. We're seeing a lot of M&A. We're seeing financings. I mean, there was another big financing last night. I heard it was 2 to 3 times oversubscribed. That's how these things start.
Okay. Well, Ari, you are the most positive person we've talked to this week. Let's get an update on Collective Mining. It's been a while since we've had a chance to talk about the company. First off, for our audience watching this, what's the high-level overview of the company, and then what's sort of the latest news?
So we're drilling off a very big gold dominant, but gold, silver, copper, and a little bit of tungsten system in Colombia. We're sitting in an area with wonderful infrastructure right next to Aris Mining's Marmato mine, which is in construction to be a large mine, should produce on a larger scale late next year. And we've made a discovery that is big. I mean, it starts at surface, right, outcropping and high grade, and it has now been drilled over 1.1 kilometers vertically and remains open. It's big. Okay, we do not have a resource estimate yet because we are trying to find the edges of the system first, which we haven't found, which is a good thing. But it's a big one, and that's just one of a series of targets. We also made a discovery that's called Apollo. We made a discovery, something called Trap, in January of this year, which is another large system. Apollo drill hole highlights. We've had 12 intercepts at over 1,000 gram meters. So that's when you multiply the length of the hole times the grade. That's, I think, more than double what Snowline Gold has had by comparison, for what it's worth. And Trap has had some big intercepts. Most recently, we announced a new zone where we discovered 30 meters at 5 grams. So this is big scale stuff in an area with infrastructure next to a mine. It's pretty attractive because of all the merits going for it. An established mining camp should be relatively easy to permit in the future, and we're excited.
Can you give us any sense of how much drilling you've done over the last couple of years?
Sure, we've completed just under 100,000 meters of drilling in total. Okay, half of that's at Apollo, the other half's been poking around some at Trap. To go to the next stage, I think we need to drill another 100,000 meters. That's kind of where our business model says, and that will take this to the point where we can hopefully reach our goal. Our goal is to demonstrate a project that has more than 10 million ounces of gold equivalent ounces and can produce at a high velocity. It's something like 350 to 400,000 ounces per year or more. And if we deliver that, it's a tier 1 Barrick style asset.
I got to say, I noticed you said the word produce. Is your goal to be a producer?
So we built a mine previously and sold it when it was going into production. It already ramped up just about.
That was Generation?
Continental Gold.
Okay, Continental.
So all things being equal, if we have the exact same inflationary environment that we have today, right, and cost of capital and labor and all these things, I personally do not think any junior should build a mine right now. Okay, I think the cost of capital is too high. By the time we're ready, that could change drastically and be more favorable. So the answer might be yes. But if I had to say today what we're doing, we will sell.
Okay, I always think it's exciting when I chat with junior companies, and they're always sort of coy about it, like, oh, we're just going to prove it. We're going to drill, and prove up a resource and sell. It's kind of nice to see, like, 10 million ounces is the goal, and it's not shocking to see that you're able to raise money based on your confidence and ability to articulate your deal. Last question for you. if I'm an investor watching, or I think you guys sound interesting, and I'm going, okay, I like Ari, I want to bet on him. What am I looking out for over the next year from the company?
Drilling, drilling, drilling. So we're really pushing the envelope on our flagship Apollo discovery. We're simultaneously pushing trap. You know, we're going to complete 40,000 meters of drilling with 5 rigs this year. Not many companies are this active. And we haven't planned 2025, but I'm going to guess we're going to drill 60,000 meters. So we're going to 50% increase the program and go bigger, maybe 7 rigs. So you're going to see a lot of activity, and you know, I mean, that's what you're going to see. So pretty exciting.
Okay, well, Ari, thanks very much for hopping on here. I'm glad we could take the time to catch up, and hopefully you'll keep chatting with us in the future, because you've gotten me a lot more excited about the gold market from your insights.
Okay.